All right, I'm coming to you from Utah Valley University tonight as I'm attending a basketball camp with our team, our high school team, as I mentioned last week. So I'll be doing classes and market outlook videos from the library at Utah Valley. But glad to have the ability to kind of go on the road, so to speak, and do the market outlook. And the market's kind of had an interesting up and down, I guess down and up move today, following through on yesterday's or Friday's bounce back that we ended up going into the weekend with, and you know we've been going so close, pushing against breakouts. When is it going to be? And today did we get it? And especially on the small cap stocks, did we finally kind of get the directional move, or is this going to lead us to a more of an up and down move tomorrow and the rest of this week, as we are just kind of flirting with the upper ceiling of this kind of sideways range that we've been stuck in for the last month or two. So I'm going to break that down in our video today. We're also going to take a look at a stock that did kind of make its own breakout pattern, kind of halting what was a very strong directionally bearish move. We'll talk about how to trade that. So let's go ahead and get started. Today is Monday, June the 7th, 2021. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, well, let's start off taking a look at the market forecast with the S&P 500 with the market forecast indicator. You can see now that intermediate line has gotten up above 80 again after dipping below 60, between 40 and 60 into that neutral zone. Obviously not pullback because we didn't drop into that bearish zone. And you can see the near-term line is kind of confirming this. In fact, we're really darn close to a cluster. The momentum lines would really drop down. Yesterday we came close, Friday we came close to a cluster, and then today the near-term line made its way up above 80 with the intermediate and market sentiment lines, with the momentum line dipping. And we're kind of holding off on getting up to a new all-time high here, or getting a new high point in that area. So strong bullish posture, and you can see if I were to take a look, the Russell really had a big move today. It had the biggest move, and you can see it got above 80 as well. The intermediate line did. The near-term line got up above 80. The market sentiment line is turning back up above 50 and rising again. The near-term line the near-term line dipped back up above 60. It never did quite dip below 50 into the bearish zone, but it did dip back up, and so it's been bullish for quite some time. That's your most bullish chart, and then your NASDAQ 100 has been your relatively more bearish chart. Finally getting a good near-term high well above 80 to kind of confirm this new bullish posture. Is still relatively weak because the intermediate line is still below the market sentiment line, but at least both are rising. And you can see that the NASDAQ trying to get up above these highs. The high point from over here was about 13,814, and we're at 13,802. So we're really close to breaking through. And again, for the NASDAQ, creating a new intermediate run. So, that was the last intermediate run, and we had an intermediate pullback. It had this intermediate pullback. Obviously, we're back up above. We got, after dropping below that 23% line on Thursday, we jumped back up above on Friday and are holding it. So it's a good bounce back above the 23% line to engage a new intermediate run. The Russell 2000, and again, you can see it's been kind of stuck in a sideways pattern here for so long. And the S&P 500, neither one of those have had the intermediate declines yet. And like I said, the intermediate line is dipping below 50 even there, but not quite getting down into that bearish zone, not like the NASDAQ. You can see on both of these two drops right here, the NASDAQ 100 did have its intermediate line drop below 40 both times. So you can see the difference in the bearishness there for the NASDAQ compared to the Russell and the S&P especially. So the S&P 500 is showing this strong posture and strong short-term sentiment to support that. But again, this is just a continuation of this, and not necessarily a reversal pattern. So that's kind of the moves that we have going on in the S&P. Let's take a look at some other charts here. This is the chart we've been watching, this directional movement index. to see the positive index has gotten back up above 25, not quite breaking up above 30. The negative index is not dropping below 20 yet. They're just sitting right on top of each other. And as a result, your ADX is really dropping to low levels, well below 20. When you're below 20, you're kind of in this trendless state. You can see over here, we're just up and down sideways until we finally broke out right there to a trending state. But we're just not getting that because we're not breaking out above 30 on the positive or below 20 on the negative at the same time. If you look at IWM, we're getting closer. It's closer than the S&P, and it looks like it might be starting a new run. Obviously not quite there, and of course QQQ, it's really not. So all of these indexes flirting with new bullish trending moves on the directional movement index, but not quite there. The RSI and the CCI kind of confirming some of that, flirting with 60 and 100 on the SPX, but then of course on the NASDAQ, which has been your weakest, again flirting with 100, flirting with 60, but not breaking through those levels to say, okay, yeah, we are in a bullish trending move right now. All right, before we look at some other charts, I invite you to subscribe to our YouTube channel. Mouse over this icon here in the bottom right corner of your screen. Hit that red subscribe button that pops out. There's also one down below the video if you're watching us on YouTube. That notifies you when our videos are posted. Also, while you're down there, hit that thumbs up icon. That tells us two things. Number one, you liked our video today. And number two, you want us to do another video again tomorrow. Quick way to give us feedback. Tell us what you think. Also, comment while you're down there. What stood out to you in today's video? What did you like? What questions or comments do you have? Post those in the comment section. Join our website at marketscholars.com. There's a link popping out up there in the top right corner of your screen. Click on that link to subscribe to our site for free. Follow me on Twitter for more content in between the videos from day to day. There's my handle right there at DavidSettle42, and join our Market Outlook Facebook group that we've created. All right, if you're watching us here on our blog, check out some of these things over here on the right, including the Market Outlook live video. Every day I do the Market Outlook, I do these live videos at 3:30 Eastern time. I put on today's trade idea before the market closes. Obviously, you all are watching this well after the market closes. So you get access to that trade idea. We also take a look at all the old ones I've done, whether we should get out of them, stay in them, talk about why and when to get out. So we do that in that video. You can get to that there by clicking on this image, or just come up here and then click on live trade review. Also, here's all of our upcoming trading rooms that we have this week. And going forward, you can see the rest of them here on this page. Again, all of our subscribers, all of our paid subscribers get access to those videos, the Market Outlook Live and the trading rooms. Our premium subscribers obviously get access to all those for cheaper than our month-to-month subscribers do. In addition to that, you also get access, the premium subscribers get access to premium tools and our class forums, where our custom content is, and interaction with other students in those classes. Come down here, click on this heart. It opens up a new tab. When that comes up here, you can click on that like button. Eventually it will come up here. Takes a little bit long because I'm in the library here. Eventually. Let's go ahead and click this one while we're going. There we go, just click on that heart right there. Same thing with that Facebook image. If you click on that face, or there we go, there's the like button, just click on that like button there. Same thing with this Facebook image, it opens up your Facebook page, and you can click on the same like button there as well. It's going to come up here eventually. There we go. Just click on that like button. Again, the more you do that, the more people will see our content because of the engagements they have, likes, comments, shares, all of those things on Twitter and Facebook. The more people actually see our content. It benefits you too, because Twitter and Facebook will promote content in your timelines from the accounts that you engage with the most. So we try to make it really easy for you to engage with us right here. All right, let's get back over here to the charts and take a look at what's going on. So let's take a look at the 3 green arrow chart for the S&P 500. And you can see obviously we continue to have 3 green arrows, a little bit of light volume, and obviously a small trading range too. And we'll take a look at that here in just a second. Here's your MACD and your stochastic, still kind of grinding higher. They're both above their moving averages. The price, after dipping below on Thursday, or dipping to the 17-day, closing back above the 8 on Thursday, well above the 8 on both of these now, and the 8 and 17 are both rising. Again, that's not necessarily as much the case in the Qs. We're just barely, the 8 and 17 are just barely getting back above 30. And of course, in IWM, they're starting to pull away a little bit as well and getting a little bit of a divergence. Look at the histogram for both the IWM and the Qs bouncing up and showing some upward movement. So both those still within their patterns. Take a look at the Bollinger Bands. For SPY, we're trading at the close to the upper quartile, which is bullish. Again, kind of like those other indicators, not quite the upper quartile there. When you take a look at the trend strength indicator, it's rising towards 50, but it's not quite above 50. We're still, below 1. So again, not a very strong trend whatsoever on any of these indexes. We're just barely above 1 and barely above 50 on WM. So it's about as weak of a trending move as you could possibly have on IWM according to that. And of course, less than a half a point in 27. So again, not a trending move on Qs either. Let's take a look here at, see, I already showed that. I wanted to show you this chart too. So today on SPY, last week we talked about that big long streak that we had of 9 days, 9 straight days where the S&P closed. And by the end of the streak, we weren't really finishing very strong. We'd start off strong, but not finish strong. But then on Friday, we gapped down and worked our way down. You can see since then we gapped up here on Friday we gapped up and gapped up to the upside. Today we gapped down and we finished with about as small of a move you could possibly get down there. We didn't gap very much. The gap was about as flat as a pancake, and we didn't move very much. One more chart I wanted to show you was this long-term crossover chart. As you can see, again, the Hakunashi candle, the body is just really, really small and getting smaller. So if I pull up the Hakunashi, you can see how small that candle is. It's just very, very about 33 points again for this week, barring, obviously this just barely started. We're only 1 day in, so, but not very, and that's not a very trending move either to have the Hakunashi to be so low. Remember, relative to the current value, that's a really small number compared to 33 points, a year ago at that level. All right, now let's take a look at the volume today and the intraday move. So there's SPY. There's that gap on Thursday. So, which again, you would expect that we'll get filled in at some point. Now, we didn't fill it in at all on Thursday, and then Friday, on Friday. And then we came down. We gapped down on Thursday and filled in the gap almost immediately. So, setting the low of the day over here, we gapped up and then kept going up. And then today came back down, and again, breaking that level would fill in that gap back down to the point of control, and you would expect that would be a gap. We're not breaking through a significant level. There wasn't a significant increase in volume. In fact, if you notice, the volume continues to be very, very light. And on Friday, it was only 55 million. Today is only 51 million. The trading range on Friday was 4 points. Today, it's only 1.5 points. So just 1.5 points trading range. So when you put that in the context, the ATR is just falling like a rock here since coming off that low point. It has dropped sharply. Back down below 4 points, back down below 1% here, and then the volume at 51 million is also going to bring that down. So very, very grinding move, very low volume. We finished the Thursday with low volume. You can see here. Today's on Friday, a little bit of a pop up to the upside, but today working our way back down with very, very low volume, extremely low according to this relative chart. When you compare it to 3M. So again, that puts this limits the downside moves that the VIX can make. We're kind of stuck in this mid 15, 16, 17 area, while the VIX to VIX 3M is at these extremes on the downside. All right, so sorry about that. I had to switch rooms. Somebody apparently reserved my room, and so I moved to the empty room, which is right next to the room I was in. That they could have also gone into, but who knows? who cares, right? We're still able to get going again. And university students, it's been about 20 years since I've been at college, and university students are a little different than they were back in the day, right? Let's go ahead and take a look at what's going on here with what's driving price action today. So give me 1 second to pull that chart up. You can see the big run that we had in real estate, that we're having in real estate, big push to the upside. But let's just take a look at just today alone. Let's give me 1 second to pull that up here. There we go. Look at that. Big jump higher in real estate today, big jump higher in small cap stocks. I mean, it was a really unique move. Everything else was very minimal, very marginal moves. With a big drop in the dollar and a big drop in emerging markets, which is not your typical pattern. If you take a look at what's going on with the US dollar right now, give me 1 second. You can see that it's also trying to figure out like a new bullish run. It's, we were up above that 23% line for so long, going up and down, kind of hitting it, breaking it, hitting it, breaking it, hitting it, hitting it. And finally, last Thursday, we had dropped down pretty sharply, light pink shading and a yellow line, but then bounced right off of it. And Friday getting up to the line, and then today getting up through it. Now you notice the intermediate line is slightly still bearish, so that's why we're still got a light pink shading. The near-term line, however, with today's little range, we're just barely starting. The near-term line is making it run into the upper reversal zone. But as you saw, it's having a negative impact on emerging markets. Emerging markets kind of really broke out last week, and are still kind of holding that breakout and transitioning to a new bullish run right now. If you take a look at the 10-year note, broke down pretty sharply on Friday. It's still kind of sitting right on support at that 38% Fibonacci retracement level. This is what the long-term bonds looks like. You can see how it's trying. I mean, see how it's like really close to getting above that 23% retracement. Very, very close. It's multiple times it's been trying to get up towards the Fibonacci resistance in this case and into that zone. Gold kind of doing the same thing. It has broken up above into that Fibonacci retracement zone between 38 and 62, and this longer term, you can see that longer term 23% retracement level. Right, that line right there that we had pulled back into and then broke back up above. So showing some bullish patterns again. Remember, gold can go up for inflationary reasons, it can go up for safety reasons. Obviously, right now it's not the safety trade, but combine that with what we see in bonds. If bonds does make that break up above its own 23% retracement level, if it makes that break there, then that combination, especially if the euro US dollar is unable to hold this little breakout up above that 23% retracement. Let's see, eventually here. If it can't quite hold that breakout, it makes its way back down again, kind of like it was doing over here. So those are different. The major kind of what the major asset classes are showing us. They're showing again kind of this cusp of risk aversion, but not quite the breakout to risk aversion. But you can also see too, not the bearish moves in those particular assets that would suggest a strong risk appetite. So hence the kind of sideways pattern and trend we've been seeing over the last few weeks or so. And most of these major indexes, as the NASDAQ itself was pulling back and everything else is just grinding sideways with a slight bullish bias, of course, since we are on the S&P just about that close to another all-time high. Now let's take a look at how the different sectors are doing here. 1 second to pull that up. Here we go. And again, real estate, of course, doing its thing, and you'll see that today as well. Let me go to today's chart. So we'll go to June here. You can see real estate, very, very strong move. Healthcare started off strong, obviously with some big news on the Alzheimer's front, pushing a big breakout early in the day. and then not quite holding the breakout by later in the day. And communication services doing well despite some kind of corporate tax chatter, global corporate tax chatter overseas. On the other end of the spectrum, look at what's been weaker: financials, industrials, energy, materials. I mean, those are the sectors that have been doing so well, right? Those are the ones that would lead us to any kind of weakness, risk aversion period that we'd have. They'd lead us to the downside. As you can see, XLK and XLY are kind of not really too strongly bullish. Either one of them, communication services is, but the rest of these have been so strongly bullish. And now you have intermediate lines that are falling on financials, industrials, materials, energy, still rising at that 90, very, very high level, close to where financials is. Everything else kind of flat except for real estate. Real estate doing very well in this kind of inflationary environment that we're in right now. So for our trade idea of the day, I wanted to take a look at, one more quick thing before we take a look at that. I want to show you the rotation graph. Give me 1 second. There we go. Here's the long-term chart. You can see industrials falling, financials falling, energy falling, materials rolling over, utilities, staples, healthcare, real estate, kind of all with strong momentum, even if they're starting to lose a little bit of that momentum. That's of course on the longer term chart. If you take a look at the daily chart, more of the shorter term, there's that rotation back up. So real estate is just going crazy. There's technology and discretionary in there as well. On the flip side of the coin, you have energy, financials, industrials, materials, kind of working their way over to the lagging quadrant, but looking like they might have one more cycle higher on this side of the relative strength ratio before working their way over to the bearish side, which is where your safety trades are currently: utilities, healthcare, staples, kind of working in that direction. Of course, real estate really kind of doing its own thing. Obviously, that's not a safety trade. Again, that's more of a inflationary trade, so to speak. All right, so for our trade idea of the day, I wanted to take a look at a stock in that technology sector that's kind of had a nice little run here after being pretty bearish Fastly, really bearish. Like it dropped down, got a lot of bullish clusters, starting to kind of work its way slowly out of that. The intermediate line's rising. The near-term line's been flirting between the 40 and 60 area, but you notice it hasn't been getting below 40, so it's been up above for quite some time. And today's move has a little bit of a breakout type characteristic to it. Obviously, getting above a bunch of recent highs. The positive indicator finally getting up above 20, with the negative already well below 25, and actually falling below 20. And then you can see the intermediate, where the intermediate line is there. If you take a look at the RSI, the CCI, they have been so bearish too, but now getting up above 50 on the RSI, getting above 100 on the CCI. So we're transitioning from not being bearish anymore, not really necessarily bullish, but definitely not being bearish anymore. You take a look at the Bollinger Bands. Finally, it's like a sore thumb, but breaking it into the upper half of the bands. There's a big gap in volume up into this area, up into another big layer of volume at that level. Of course, taking a look at the market forecast for it. Eventually, you can see intermediate line rising up above the market center. The other one I wanted to show you was this one, 3-green arrow chart, or this chart. The big bearish candles that we have been getting are now transitioning to more of a bullish pattern with this very low PPO, which you would expect would move up to a relatively high PPO. If you take a look at where that PPO ranks compared, relatively speaking, if we go back, say, let's go 20 years, or go back as far as we can, it's the lowest that the PPO has been. So pretty bearish pattern. Actually only goes back to, looks like, 2019. Now let's take a look at the 3 green arrows. Having 2 green arrows there, and the MACD histogram rolling back up because, as you can see, the MACD is turning up and close to crossing above 0, stochastics well into the upper reversal zone. Like I said, the breakout above the 17-day moving average that we haven't seen before. And kind of flirting with it before. And again, not a directionally bullish pattern here, but also kind of ending the bearishness. So whenever you're not really directionally bullish, but you're not bearish anymore either, and you have a low down low, and you have some resistance up above, you'll know what kind of trade that sets us up for. That sets us up for the iron condor here. So let's take a look at the iron condor. We looked at selling. Here we go. Selling the 60 at the 25 delta, buying the 65, selling the 45, buying the 40. You can see what it looks like here on the chart. For a full position size, here, let me get rid of that, because if I remember correctly, the earnings, we've already had earnings in May, so they will come later. They will come here in August, early August, right about there. This will be a July expiration. You can see there, so full position size. I'm trying to make 450, which means that's how much I'd be willing to lose. If it were to really break out to the upside, of course, you got a big chunk of resistance above, so it's going to be hard for that to do. And we've established a low point to the downside, which will make it hard for it to really dip too strongly, especially with this kind of breakout move that didn't start a directional bullish run, but definitely ended the directional bearish run that we've had. So that's what we're taking a look at today for our trade idea. All right, that wraps us up for today. So you've heard from me now. Now I want to hear from you. Use that link that's popping out in the top right corner of your screen. That takes you to our Market Outlook forum. I'll open up any threads, reply to anybody else's thread. You only have to be a free subscriber to get access to that particular forum. But let's keep this conversation going in between videos. As always, thank you very much for watching. Remember to subscribe to our YouTube channel, hit that thumbs up icon, as well as like us on Facebook and Twitter too, and then comment on the video. Have a great rest of your Monday night, everybody, and we'll see you all next time.